Nei te mihi nui kia koutou ko Chad Hagmark toka whenua. Welcome everyone, I'm Chad Hagmark, the Head of Strategy at Payments NZ. I lead our work looking at the future of payments for Aotearoa. It's great to have you joining us for our Techweek session, Next Generation Real-Time Systems and Architecture Perspective. I'll open the session by providing a brief intro to Payments NZ and an overview of the work we're doing to understand what next generation real-time payments capability could look like for Aotearoa. I'll then be handing over to Ryan McQueen and Robert Langley from Accenture, who will provide insights into the configuration, architecture, and capabilities of modern next-generation real-time ecosystems. Ryan and Rob will also share their thoughts on best practice in new system design and highlights from recent implementations they've been involved in. They'll take questions throughout their session, so please use the Q&A function as things come to mind. Payments NZ is the Payments Association for Aotearoa. Our vision is a world-class payments for Aotearoa. This speaks of our aspiration to drive world-class payments outcomes for the benefit of all. We have 4 pillars that define our role: leading the industry, enabling the trusted transfer of value, being the go-to authority on payments, driving a collaborative, innovative, and open payments network. And we see our role as one of empowerment, fostering and leading our industry into the future, enabling the transfer of value through a safe and trusted payment system. We have a payment system mandate, and that's looking after the engine room of the payments ecosystem. We govern and manage payment clearing systems. We manage payment system rules and standards, and we facilitate interoperability and trusted transfer of value. We also focus on strategy and innovation, promoting innovative, interoperable, safe, open, and efficient systems. And we do this through things like the API Centre, industry change management, long-term strategy, modernisation of the payment system, policy, research, and thought leadership. And you can check out our website for environmental scans, research, and our thought leadership. I'll now very briefly run through the work we're doing looking at the future of real-time payments for Aotearoa. So why real-time? The payments ecosystem is constantly evolving. We're shortly moving SBI, our batch payment system, responsible for transacting $1.5 trillion worth of payments per annum, from operating 5 days to 7 days. And that's happening next weekend, 26th of May. We recently implemented ISO 20022 messaging in our high-value clearing system. And over the past few years, we've continued to build the open banking ecosystem for Aotearoa through the work of the API Centre. These initiatives fit into our overarching payments modernisation plan, which we developed in 2020 with the industry. The capability building blocks of this plan set out the components required to modernise our ecosystem by 2030, and you'll see those there in the aptly named beehive diagram. Real-time capability is a key cornerstone building block of this plan. When configured correctly, a next-generation real-time system has the ability to support delivery of all these building blocks. And why are we looking at a next-generation system? Accenture are going to talk a little bit more about this shortly from an architecture perspective, but real-time for a country like Aotearoa, which already has an efficient batch system, needs to deliver more than single-thread real-time value. Much like the Waimakariri River, pictured in this slide here, a next-gen platform is interconnected, delivering enhanced innovation, connectivity, and efficiency across the ecosystem. For example, rich data flows via ISO 20022 messaging delivers the potential for a range of value-added products and services, for example, straight-through payments, and is a key enabler in cross-border interoperability. Improved connectivity and participation opportunities provide flexible connection options, and building a next-gen system from the ground up with extensibility in mind supports a range of use cases today, tomorrow, and well into the future. So what are we focused on at the moment? Well, we've been working with the industry and Accenture to consider how a next generation system could look for Aotearoa. We're currently developing a foundational design and identifying how that fits into our strategic plans for the future. Later in the year, we'll release key elements of this foundational design for feedback on how the system should be configured for Aotearoa through an industry strategic investment case. We'll also be seeking commitment to proceed with next steps. The industry strategic investment case will focus on setting the scene for next generation capability, setting out the foundational ecosystem design, and setting out the high-level design and delivery structures required to take us forward. That wraps up a very quick run through of our real-time initiative. If you'd like to stay across the work we're doing, you can scan the QR code to check out our website, register for updates, and please don't hesitate to reach out to the team using the email address on screen if you have any questions. We're happy to talk to you. I'd now like to welcome Accenture's Ryan McQueen and Rob Langley, who are going to share insights into the architecture of next generation real-time systems. Ryan McQueen leads Accenture's payments, open data and distributed ledger technology capability across Australia and New Zealand. Ryan is an accomplished executive with 25 plus years in experience in banking, financial services and payments technology. His experience includes consulting and advisory to large corporations, as well as fintech startup businesses, assisting new market entrants with product services and market launch. He also has experience at senior management levels, working with major US and Australian banks with a focus on revenue and balance sheet growth. Ryan's passionate about new technologies, how new technologies can enable us to bring new customer experiences to market. Rob Langley is a technology consulting director in Accenture's financial services practice in Australia, and is the lead payments architect Australia, New Zealand, Middle East and growth markets, specializing in payments acquiring, transaction banking, central bank system transformation and national real-time payment systems, payment market infrastructures, government banking, CBDC and blockchain. Rob is a world-class expert in national payments market infrastructures, strategy, architecture and design, in particular real-time and CBDC payment systems. Ryan and Rob, kia ora koutou, welcome, great to have you join us. A quick reminder to the audience, Ryan and Rob will take questions throughout their presentation, so please use the Q&A function to send those through as they come to mind. Ryan and Rob, over to you.
Thank you very much, Chad, and thank you for having us. If we can launch our presentation, what we're going to talk to you about is how real-time payments platforms have evolved over time. And real-time platform payments have been around for over 20 years now. So we're pretty fortunate in when we think about where New Zealand is and where New Zealand could position itself in the future. There are over 60 countries that have real-time payments systems that are live. And in fact, it's quite interesting because, you know, if you take what some payment systems that were built 15 or 10 years ago, many of those countries are currently rethinking or relooking at how those were built and what they need to do to upgrade their current infrastructure to be more holistic, to be able to work within an ecosystem rather than just value transfer. And that's a really interesting part for New Zealand. We've got this opportunity as we design and we land on a real-time payments ecosystem design rather just a value transfer design. You can start to look at the new functionality and capability that can come from the platform, extend the reach into many, many other areas of the economy, tapping into more data, into API centers, into digital identity, potentially into central bank digital currency in the future. So there's a lot of great opportunity here. And even though we're getting a bit of a late start for New Zealand, we're starting with a really, really rich history of platforms that have been built around the world. If you can go to the next page, I'll just run you through what the generations look like. So there we go. So if we think about UK faster payments, that was really a first generation type of system. That was limited data on data payload to do fast payments on card switch and so forth, right? But then a couple of years forward, you move to a next generation. So the second generation of platforms. That generation actually leveraged what happened in the UK, for example, and they said, well, what else do we need to add that could add value back into the economy, add value back into how people interact, how the industries interact with the payment systems. That's when we saw other things come to light, for example, in Saudi Arabia, request to pay, direct debits, several overlay services, account aliases, and that's where the ISO 20022 started to come into play as well. Then we move on to a more recent one, which is, we call it the third generation platform. And the third generation continues to build, right? And actually what Rob's going to do is take us through how these platforms have built capability over time and how they start to enhance what's available. So for example, in the UAE, that's when they started to look at real use cases around what are things that could be in the market, that could be highly useful in the market, connected into the fundamental real-time payment system in the background. So we're talking about e-commerce, QR codes, mandate payments, again, request to pay, and many, many more other overlay services. But that's we could say that's of the past. So that is the foundation upon which we can design something even more holistic and more ecosystem friendly for New Zealand, to allow New Zealand really to be at the forefront globally in this space. Beyond the third generation, we're looking at international connectivity between real-time payment systems, domestic real-time payments around the world, open data interoperability, for example. How does a real-time payment system work with a consumer data right ecosystem and the payment initiation part of a consumer data right? You start to think about what are the things that other generations of payment systems have struggled with. They've struggled with fraud, because in essence, it's an instant transfer of funds. So you start to think about fraud very differently, rather than bank by bank, for example, or financial institution by financial institution. You start to think about the holistic transfer information and how to use a holistic transfer information to have better systematic fraud detection. There are a lot of industry verticals that can be built off this. Obviously, a lot of connectivity, message standarding through APIs and so forth. And then we move even further. So if you think about that's what we could do today, what could we do further, right? So around the world, when we have new types of currencies coming into play, digital currencies. So a digital currency can't exist without a real-time payments platform. In fact, they have to coexist to make it work. But then you think about what could you use from a data perspective as a service. You think about opportunities to be integrating these capabilities into wallets and digital identity and so forth. So there's a lot to take in here. But if you think about where we are from a New Zealand perspective, is we've got 20 plus years, really, really rich global history. And we've got the opportunity to start from a foundation and build off of that. Over to you, Rob.
Thanks, Ryan. Now, what we're going to do is take you through a bit of a journey based on what Ryan just said around the generations of payment, real-time payment platforms as we see. Just so you get an understanding of that evolution over time, and when we get to fourth generation platforms, what does that really mean? So if you look in the early days of real time, it was very much a case of, well, I've got a payment, I need to get it to a bank at the other side. The parallel that I use to date is a switching platform, therefore I'll build a switching platform. And if you look at, say, UK Faster Payments, which is some 20 or more years old now, it was very much based on that paradigm. And it was based on ISO 8583 transactions. So there's very limited data that you could move across. And as much as possible, it was just a single scheme. Right now, some people call them overlay services. I refer to them as schemes, but I think you get the idea, right? It was very much a single scheme. But over time, though, we then start to see the breakout of different schemes, so different payment types, debit, credit, request to pay, and so on. They become new schemes in the platform. So the platform evolves somewhat. So it's no longer just fast switching. It's very much now a case of how do I extend the platform? How do I go beyond just a switch to start to offer services on the platform? And that's where proxy service comes on stream, where a mandate service comes on stream. And in some circumstances, and it's somewhat more contentious, I guess, there could be a centralized operational data store or a payment data store in the platform. So the platform's changing, and as does the access regime. And along the way, there are also multiple models of settlement with the central bank. A lot of a net deferred settlement, you're probably aware, because in MPP, over there, they have real-time line-by-line settlement, which is somewhat more unusual, but there are different settlement models. So you're starting to shift away from a core switch to agility, to something that's somewhat more agile. As we migrate through to third generation, we start to see an extension of those services available on the platform. And we're going to go in a bit more detail in some of these in a minute. So we see that. We also see the introduction of some sort of systemic fraud detection, and in my view, fraud is a systemic problem these days, and therefore it needs a systemic solution to it in some manner, and we'll step into that in a moment. But certainly trying to manage fraud, to do it beyond just the realm of the view that banks have in their own little world, is something that payment systems should carry these days. Then we shift into our fourth generation. This is the new world. This is certainly expanding even further the capabilities of the platform, new functionalities, but also expanding the reach of the platform. And we'll go into this a bit more a bit later, including opening up access, having sandpits, and trying to develop a marketplace around the edges. And certainly, I think some of those previous platforms, one of the challenges there has been how do you open access to those platforms, and as we go forward, opening the access and getting better integration into the processes within the economy is a desirable attribute. So let's just step into those platforms a little bit, those generations, if you like. Now, if you look at this, that first generation, as I said, it was very much done as a switch, and doing that model. There was a single scheme developed around it. It was very much about fast credit transfer and nothing else. And over time, certainly in the UK, you'll see different services are built around the platform. So proxy, it's a capability that's built around the platform with Pay In or Pay Now. Interestingly, within the UK platform, there's a capability to do some sort of fraud checking, or certainly mule account detection, based on the database of payments that's running through the platform. And then this is further confirmation of payee request to pay and so on. So these services, I guess, essentially are built around the platform rather within the platform. If we then look at that generation 2, this is where the services now, as I said earlier, become schemes, right? So credit transfer, mandate payments or direct debits, request to pay, each of those is a scheme. And in fact, proxy is a scheme, mandate's a scheme. And when I say scheme, what that means is you have a set of data definitions, you have SLAs on instructions, you have a protocol of instruction flows, confirming receipt of payment, confirming settlement of payment, and so on in the broader protocol, and so on, right? So these are very much the schemes, just like you'd think of schemes in any other payment scenario. And as I said here, we start to look at how do you open up this platform to be something more than just something between the banks. It's just been a challenge for some of the earlier schemes, because the earlier schemes are very much originated from the banks. And we also start to see on the edges QR codes. Now, just to go back to those schemes, the other key thing about the schemes is as you subscribe and consume a scheme, what you're doing is starting to drive an outcome for end user. So scheme is very much defined around what's the end user experience, as in what data payload am I expecting, what's the SLA for the value transfer that I'm expecting, is it 2 seconds, 3 seconds, 5 seconds, or so on, and so forth. I would make a comment here as well, and we'll perhaps come back to this a bit later, but a bulk payment could also run over this platform as a scheme. Now, it's obviously a bulk payment, given its bulk origination of instructions, could run across the platform because it's just a message across the platform, message or an API or however that works, with an SLA of say 30 minutes. It's just a different type of scheme across the platform. So I don't think that real-time payments just has to carry real-time instructions. So as we've been highlighting, you go to third generation. This is where, as you can see, the services, the extent of those services starts to expand out significantly. And this is where the platform starts to shift from just doing value transfer to starting to be tailored to what the end consumers want to see. And certainly in our experience, some of our implementations, we've started to go down this path. Ryan mentioned UAE, we're in the process of going live with a platform that's like this. So it carries a number of these dimensions. Doing e-commerce, account-to-account e-commerce transactions, leveraging request to pay, in essence, where you send during your e-commerce transaction, when you're ready to do a payment, you nominate your proxy that you want to direct your payment to. You initiate during that process a request to pay to your bank. The platform takes that request to pay, transfers it across to your bank. The bank detects that it's just received a request to pay. It then sends a notification to you on mobile or internet banking, whichever channel you're using. You then authorize that request to pay immediately. That authorization then results in a credit transfer that's initiated from your bank back to the merchant system. That credit transfer also carries the reference of that transaction so that it can correlate to that transaction that's implied on your screen. And it reconciles against that currently running transaction. The merchant receives their money in real time because the real-time platform, and your transaction is completed, all without a card on the card schemes. So that's certainly a way to do that. In the UAE, we're doing electronic checks. Take it or leave it, I guess. We certainly, as I mentioned, started to look at fraud services, how we integrate fraud into fraud management, detection, trying to avoid fraud from the outset, because certainly the challenge with real-time platforms is recovery becomes very difficult after a fraud event. Connecting to open data and providing integration into wallets and so on, and certainly our platform there has APIs and SDKs to support that type of capability. The other thing that platform we're also doing is enhancing the access protocols, not only through gateways and APIs, but sandbox to play in, and also for certainly to onboard banks after the initial project is to offer a sandpit so that banks can self-certify and self-test and then bring them on stream in their time frame. Although one of the very, very key characteristics of the success of a real-time payment platform is account reachability, and making sure that there are sufficient, that as many accounts as possible are on board on the platform as soon as possible as you go live, and how you support that's important. And certainly we spend a lot of time in some of those projects with the banks and making sure that the banks are ready to come on stream. So when we come to a generation 4, one of the key dimensions, and just talking about banks and bringing banks on stream, one of the considerations we have here is also what can we build in the platform. Now, this is an extensive platform. We'll go through this in a bit, but what can we build in the platform to facilitate bringing on stream not only banks in the platform, but other service providers? It could be fintech, could be fraud, could be FX services. And what can we include in the platform to, across the whole environment, lower the barriers of entry into the platform? So, for example, would we have a service in this platform that allowed for exceptions and investigations, so that all the participants only needed to plug into a portal rather than building that capability themselves? But let's go through this platform. And as you can see, we're continually extending the scope of the real-time platform. So we're now at generation 4. We have this concept of layers, right? So you have the core capability, the basic payment schemes, then the commercial schemes. Now the commercial schemes is a very interesting concept, right? Because this is going beyond just value transfer instructions. It's going beyond just doing real-time payments. It's going beyond just having an instruction, OSHA 2822 instruction with a bit of data in it. The commercial schemes is very much where you can start to build solutions for industry verticals. So it could be, say, mass transit ticketing, or it could be a whole solution for electronic invoicing, or it could be an extended capability for managing an asset registry using delivery versus payment, and that could be supporting property transfers or a motor vehicle purchase and so on, where as part of that entire workflow in that scheme, you're taking the value, holding the value in escrow while the scheme process continues out to the asset registry, transfers the title ownership from one party to the next. When that's successful and committed in the asset registry, the process reverts back to the value transfer part of that process, takes the escrow off the value, transfers the value across to the other party, and then closes out the process of that transaction. Now, obviously, in that case, it may not be a 5-second transaction because there's a number of different parties and different systems involved. So the SLA on a property transfer may be 5 minutes, for example, as it coordinates all of those various elements in here. But I think what we're going to see here, though, is we're starting to expand out the remit of this platform beyond just value transfer, and allowing the platform the capability to be able to more broadly integrate into the environment to drive out not only efficiency, and there'll be a number of inefficient processes in the economy as is the case today when you think about, I do a value transfer in a supply chain scenario or an ERP system or whatever. But at the same time, I carry very little information about the overarching business process that value transfer related to. And in which case, I then have to have a whole reconciliation process, right, to correlate the payment back to that business process. Now, what we're suggesting here is that those commercial schemes that could be implemented in this platform can take those processes and make them somewhat more atomic, right, and make them certainly attractive to banks, because you can then start to look at all of those cost pools in industry, create these new services, and turn those into new revenue streams. At the same time, for innovators, for fintech and the like, there's the opportunity to provide services into this platform, extra functionality, and we'll step into that in a bit, how you could do that. Or equally provide your services in here through the access processes, so that this platform could be consuming those services in the scheme. Now, those commercial schemes could be created by the banks, could be created by the payment system operator who's running this platform, or they could be proper commercial services created by external parties who think they can run a service across this platform, find ways of making a revenue and make it profitable, for themselves, and so on. So, or equally, it could also be government-sponsored schemes where they have particular requirements around welfare payments or emergency payments that they want to be able to apply across the scheme. So, as you can see, as we've been developing this concept, this platform to get to generation 4, we're starting to look at how does the platform go beyond just value transfer and integrate into the economy and help drive efficiencies, but also through the modular nature, which we'll talk to in a moment, start to strive out and drive new opportunities for new players and new participants. Also, the last one on here is the opportunity with this platform to then do international linkages. So how does it connect to international real-time payments platforms? And while we won't talk about it much here today, how do we connect using central bank digital money instruments, CBDC type payments connect CBDCs internationally as well. And there's no reason you can't do that, right? And start to support, say, key trade corridors for New Zealand into Australia, Pacific, Southeast Asia, and so on. Which brings some extra interesting challenges around how do you manage proxies on an international basis. But they're not insurmountable, right? And it comes to some sort of mutual agreement to how you make unique proxies across what's now becoming a broader ecosystem. And the last point I'll make on this slide, not only about identity services and how do you bring in identity services, because identity is crucial, not only to payments, but as you expand those commercial services, you really need to know who the entities are that's participating in each individual transaction, but also how do you attach a marketplace, to this environment, so that many parties can offer their services or create schemes and so on into the platform.
Now, Rob, before we jump onto the next page, we have two questions. I think it's proper to answer while we're still here. The first one is about, the question is, what are some key strategies for account reachability? And I'll start and obviously jump in. I think the observation that we have across so many different countries we work with on a national infrastructure perspective is sometimes where accounts sit, obviously bank accounts sit within the commercial bank side of it. Sometimes there's a focus on retail or consumer, right? And there's a very, very heavy focus initially on that side of the equation, where realistically what you want to be able to do is you want to look at account and account reachability both across individual through to entity, because there's not just, we're not talking about the benefits to an end consumer perspective, the benefits in terms of let's call it the baseline instant value transfer and the effect on cash flow to businesses of all sizes is really important. So one of the strategies that is really, really critical is when an industry and a nation is looking at something like this, is to think of it from a holistic perspective rather than just run down, let's say, a retail or a business perspective. Look at it together. Is there anything you'd like to add?
Account reachability is a key thing, right? And certainly in the initiatives Accenture's been involved with, we spend an inordinate amount of time with the banks, helping them prepare to get that stuff on stream. And our UAE program has been very successful in that regard. And we brought on, it's a very high percent, I think it's 85, 90% or something, account reachability very early on in the program to make that work. But I think to iterate Ryan's view there is that a lot of these platforms focus on retail payments, transfers between end consumers, whereas really the business opportunity, and if you look at this Generation 4 platform, right, the opportunity here is very heavily focused on how do you deliver solutions to corporate, institutional, and business bank customers, and having those accounts on board to be there is important, and that's certainly from the service providers, but banks or otherwise. And here, that's where you're much more likely to make your revenue streams, as opposed to a simple person-to-person payment, which generally everyone expects would be free.
Thanks, Rob. Another question, which is quite interesting, the question is there a growing trend to slow down real-time payments to combat the rising levels of fraud?
So I think been highlighting in this platform, yes, there is that trend, but also the reason for that is that in the majority of systems that we've seen, not perhaps the new ones as I've been describing, fraud is still managed at the banks at the individual participant level, and so there's no systemic fraud checking capability, and that goes across a couple of dimensions. One is during payment initiation, how do you do better risk scoring on a payment so that the fraud doesn't happen to start with. And I think a trend we're starting to see, which I think will continue, will be to run an API from the payer bank to the payee bank and get some information about the account, so that, for example, you don't have a scenario where for an initial payment offering, the payment's actually going off to a personal account. So you have some of those things. But then with the centralized, well, with a platform like Generation 4 platform, particularly if you have a payment data store in the middle, then you have the opportunity to do fraud detection, fraud mitigation activities, not fraud interdiction, right? So the central platform will never take on the liability of interdicting a payment. All it'll do is detect and notify the parties at both ends, so that they have an opportunity to hold that payment and do an investigation. And I think best practice typically would be to take a payment, to mark it as uncleared funds when you first receive it, and then based on receiving settlement, which is typically a separate process, which may run in the next second, right, to mark that payment as then cleared funds. Or alternatively, that gives, having that break gives you the opportunity to put other stops in place for fraud detection, AML, real-time AML, if you want to do that, or other reasons that you might want to hold that payment. So there's lots, to answer the question, there's lots of discussion around adding friction to payments, which is a approach. But if you start to implement centralized or systemic fraud management, then that may mitigate having to do that to some degree, and continue to provide a good customer experience, but at the same time, as much as possible, try and prevent fraud or detect it in flight during the system, through the system, as opposed to the current processes. To date, you're hoping for the best when the receiver bank gets that and starts to do detection. Okay, might move on.
Yep.
So how do you build one of these? And we'll relate, this is a very high level of something that we've been building recently, but what's key in this new world is to have two processing areas within the central platform. One is core, as we call it here, and this is really where you're processing the value. So this is a highly locked down intranet connection between banks, because banks will still do payments, because banks need to do the clearing, but also the settlement of payments. So banks will always do the payment. But that core area, that's a very much locked down process. It's all about processing the value component of the payment, doing the clearing, doing the settlement, managing the data, making sure you understand identity of the transaction that's flowing through and so on. Right? So this is very much a lockdown environment, single source of truth of the payment, and so on. But at the same time, and standing beside that platform, right, is what I call the supplementary zone. Right? And this, somewhat simplistically, right, is the zone where the overlay services are processed. Now, the overlay services, right, are customer facing. Overlay services can be facing into external players like fintechs, big techs, other capabilities. And so this supplementary zone is somewhat more relaxed from a security point of view, because it's internet facing, as opposed to the core processing zone, which is very much a lockdown intranet. And there's limited connectivity, obviously, between these two zones within the platform. But in that supplementary zone, not only are you processing overlay services and all the vagaries around that. So if you think about the account-to-account payment, e-commerce payment that I talked about before, that's initiated through the supplementary zone. it will communicate across to the core zone to do requests and get the value transfer instructions running, and then communicate back to supplementary zone when the transaction is completed to go back to that merchant payment in the e-commerce setting to process and close off that process. Along the way, and certainly a key part of this entire process is loosely coupling processes, doing a service-enabled, event-driven process as much as possible, because we also want to be able to make these platforms cloud-enabled or even cloud-native potentially as it runs through. So there's a number of principles. So if you take this architecture and then contrast it back to that generation 1 that we looked at very much earlier, which is almost like a single switch processor, right? We've certainly migrated a long way forward. And the decoupling, the modularized architecture that we have here, not only in the core process, because the core process wants to be efficient as well, right? But in that supplementary zone where we want to be able to add capability time and time again, not just for overlay services, but some of the internal processes like billing, exceptions, investigations, looking at data, because we'll hold a lot of the data there so that you can do analytics, potentially even analytics for monetization processes outside of just operational processes and so on. So this modular architecture then allows us the ability to start to look at how do you implement this thing, right? So I think some people will look at this and say, well, Rob, what you just showed here, this picture, not that one. This picture's big and scary, right? And can we ever actually achieve it? Well, yes, right? And the way to do it is leveraging that modular capability. And from the outset, while you have a robust architecture that can be expanded time and time again to accommodate all those things I talked about, you certainly start off with the core. So right in the bullseye, in the middle of here, deliver those core capabilities so that top left, you've got your basic services, so you can get the platform running, you can test the platform, you get the account reachability in place, you get proxy and mandate services in place to run the platform. At the same time, obviously you need to control in the top right of this picture, right? What's the integration capabilities? How do you manage platform access? What are the gateways into the platform? What's the identity services that you want to use? So you need those two elements on the top of this diagram to make the platform work. So that's the initial work. But then over time, as you bring on board new functionality, wherever you get it from, so the platform itself could develop functionality or could be third-party functionality, you can then start to augment your payments. And so this is where you could add data to an ISO 2822 instruction to make it somewhat more data rich as the process flows. And then bottom left, this is then really where you go to that much deeper ecosystem integration. This is where you extend the overlay services. You create services not only with core components of the platform, with externally furnished capabilities from our fintech colleagues and so on. So this is then how you build those things, right? So on the left here, your basic credit transfer services, your bulk payment services, as I mentioned before, and so on, right? There are reusable components in here. Credit transfer, proxy, settlement processes, returns, rejects, and so on, right? So you're recombining those components to make your basic services, those schemes, right? So a credit transfer scheme or overlay services, some people call it, or a bulk payment service, a debit transfer and so on. Then in the middle, as I mentioned, in the middle here, we then look at how do you augment those base services? How do you bring on board extra capabilities? Could be integrating further. It could be adding extra information in the payload so that you can do an e-commerce payment, right? Or it could be an electronic invoice payment, right? Where you've got a value transfer, but you want to carry extra payload so that you can correlate the payments of the invoice all in the one process flow, not separated business process events. And on the right hand side of here, this is where you then really go to town on the platform and start to create extended services that integrate into various industry verticals, so that you can tailor these solutions based on an ever increasing array of functionality delivered into the platform or available in the platform to create these new schemes. And so you can see this this modular capability allows for, a generation of time and time again of different services. And really the services that are available here is only limited to the functionality that's available to the platform. But if that functionality is enabled by a highly modular and scalable platform, an underpinning platform, then while you can go in somewhat simplistically and just do the core capabilities, the platform also allows you for enhanced innovation and extended capabilities to really take this platform and build solutions for a much broader audience than just real-time value transfer might offer, but also allow you to embed these solutions out into the economy and start to draw significant efficiencies into the general economy, way more than say a generation one, which was just ISO 8583 value transfer. So I might stop there and hand back to Ryan just to start to wrap up here.
Thanks. And before we jump to the next slides, we just have a couple of good questions coming through. The first one is it's probably quite a tactical one. It's around account proxy information, and the question is, what sorts of information can be shared between the sender and receiver across the network? I'll kick this off. I think it's going to be up to the standardization of the data that's flowing through, right? And so how much or how little, right, is really dependent on what's available. For example, when we think about account proxy in some markets, an account proxy gives the back-end information. Account proxy could be a phone number, a mobile number, whatever it may be, an email address, but it carries through all the payment-related information that's necessary to enable the payment. So it could be the bank account number, it could be a number of different things. Whether or not that is actually exposed on both ends, whether or not that it is required to be exposed is a different question. Anything to add, Rob?
Yeah, look, I think proxy is certainly one of my more favourite topics across this whole thing. As Ryan said, proxies typically mobile phone number, email address, and so on. Right? With a proxy, the end consumer needs to identify and demonstrate that they actually own that proxy. So there's a whole lot of trademark issues, of course. There needs to be moderation on proxies because obviously you can't have profanity, or we don't have profanity and the like here. But at the same time, proxy, to answer the question, to add information to the proxy, there's a concept of what I call encoded proxy, where, for example, a proxy could be a construct of an insurance company's name and the policy number of the person who has that insurance policy. So that proxy, through some convention, has name and policy number that's delivered to the policy holder when they want to make a payment into it. The payment goes to that proxy. The proxy would be resolved into the account of the insurance company that they want those funds to go into, but at the same time, it's automatically carrying in reconciliation information. So you can certainly do that with the proxy. Chapter and verse, taking a PDF and something like that, that's not really the role of proxy. That's much more the role of the scheme payment. If it's one of those schemes where there's a significant information payload that wants to go with it.
Rob. Another good question has come through, and the question is, have we seen any markets successfully start to commercialize platforms or services, or have the drivers to date been efficiency and cost takeout? So I'll kick off the question and over to you, Rob. But the drivers of this have not just been efficiency and takeout. It's about what else around the flow of information can be utilized, right? And I'll give it a good example. So if with a real-time platform which enables QR coding, for example, within a QR code, you can do a lot more, obviously, than just capture the payment information. You can capture a lot of things relating to that actual transaction. So think if you're checking out, you've gone somewhere, you've done your shopping, and you're checking out the counter, and there's an option to QR code this payment through a real-time payments platform. But that QR code is also carrying an incredibly rich amount of data. For example, what the shopping list was, right? So there are a lot of examples like that where and it hasn't happened, beyond it hasn't happened in first generation side of it. It's very hard to start to add on in first generation real-time payments capability. It's happened on Gen 2 and forward. So again, it's well beyond just the efficiency and cost takeout. And on the consumer side, on the commercialization for the business end of the spectrum, there are an incredible number of services that have spawned off the back of this real-time information, I wouldn't say payments, information transfer, and how that can affect cash flow management and the services that a small business would have available to them in terms of really, let's call it instant cash management capability. Many times in small business, you're really waiting on your inflow of money, right, to be able to pay your employees or pay your supplier if you have quote unquote cash on delivery for services, for products. So there's an incredible amount of cash flow efficiency that flows into the economy, which is actually speeding up the trade. Rob, anything to add?
Only very simply that a lot of those services are starting to evolve around real-time payment platforms. But I think this Gen 4 model that we're looking at here, it's very much how you can use the platform to build those services within it, and add to functionality, and so on. I won't go any further because I know we're getting a bit short on time.
Thanks, Rob. And I might just, a few minutes left, I might just start to close out. To the next page. Oops. There we go. So if we step back and we say, well, what's the opportunity here? The opportunity is well beyond what's called financial services in New Zealand. It's actually a holistic economy perspective. You think about the possibility of one, designing a system that is capable of things that we talked about, right? But it's really, really important to start with the right design and not start by cutting off things that that initially might be very hard to bite off and chew. But let's not start to cut off things and make decisions where you start to code things where in the future, as many other countries have found, they've had to really open up their systems and say, well, we forgot about how we would potentially need to integrate into smart contracts. We didn't take into consideration digital currencies in the future, right? We didn't really have a good chance to think about how to truly embed payments into a seamless system. We're obviously coming through, there's almost everything's connected from an internet perspective. So everything will be able to do something related to transaction, to information or value transfer in the future. And I think really importantly, from a New Zealand perspective, and because of New Zealand's massive import-export business, is to make sure that New Zealand is right up there with all the countries it trades with, to be able to allow both consumers and businesses to deliver what's expected from international trade partners. The last thing we want to leave you with is really an open question to you, right? So with what we've talked about today, there's tons and tons to consider, but on your side of the equation, what is it that you can think of that would actually start to deliver incremental value to the economy, to your business, or to your consumers or businesses? And there are a lot of pieces here that we talked about. We talked about standardization of messaging, ability to reach all client or all wallets and all accounts. We think about how to enable the system through sandboxes to be able to play it in a trusted manner. We talked about the need for at the, let's call it at the platform level, a really strong ability to monitor and flag potential fraud so participants can decide what to do with it. And obviously there's the cross-border side. So with that, we wanted to leave you this with a couple things to think about, and I'll pass it back to Chad.
Thank you very much, Ryan and Rob. Appreciate you taking the time to share those insights with us. I think of particular interest is the flexibility with which these new systems afford, but getting that foundational design of this right from the outset is really important. We've got a great opportunity now to leverage learning from the many jurisdictions that have gone before us as we work to build out something that's both world-class and uniquely Aotearoa. So thank you, Ryan and Rob, very much for that. There's just a couple of open banking questions that were in the Q&A that I'll very quickly answer. The first was, will open banking benefit New Zealand tech companies in the next 2 to 3 years? And yes, it will, through allowing business propositions leading to greater competition, innovation and choice of financial services. And the second was, when will NZ's open banking infrastructure be ready for payment service providers to integrate to? An announcement will be made by Payments NZ shortly on when the largest API providers will be required to have open banking infrastructure available. And we're just working through some final governance processes before that announcement's made. And that brings us to the end of this webinar. Remember, if you'd like to hear more from Payments NZ or about this work, jump on our website and register. And thank you for your time. Ka kite.